Welcome back, everyone, to another CPI data release. Gotta catch all data releases this year because, folks, this is the year to see if inflation is truly transitory or if we're smoking crack. Welcome back to another episode of a CPI data release. CPI data release comes out in about the next 90 seconds here. So we are going to go deep into the numbers the second they are available for us. Let's quickly get the expectations ready. We are looking for core with the following bell curve at 0.5%. We are looking at the month over month move of CPI of 0.2%. Folks, if you are a moon boy and want to go to the moon, or you're even a moon girl, whatever, you want to see a negative number here. That would be sick. That would be like the first time we've seen negative numbers. Yeah, anyway. So, and then of course, headline expected to be 8.7. Now, here's how I'm going to read these out because they come out in about 45 seconds. I'm going to read them out and then we're going to look at the actual deets of the report. But the way I'm going to read them out is I'm going to read out month over month first, which again we expect at 0.2, core at 0.5, and year over year at 8.7. Those come out in the next 25 seconds. So I'll read those out as they come out. And then, of course, what we'll do is we'll see what the market does, and we'll see what the actual deets of the reports are. Ooh, here we go. Get ready, because yeah, this could tank stocks quite juicily. All right, here we go, and it is 8.5 headline. I'm actually reading it in reverse. Oh my gosh, 0% month over month. Let's go. 0% month over month. 0.3 core. Core comes in 0.2 under, and the headline comes in at 8.5, which is also 0.2 under. So that's a miss on both core and year over year, missing by 0.2. But 0% month over month. It's not a negative. It's not as juicy, but it is a freaking zero. Holy smokes. That's awesome. And then we have real average. Okay, well, yeah, then of course you could subtract to get real average hourly earnings year over year at negative 3%. You've got real average weekly earnings at 3.6% to negative. But that one's always been negative because you're really just taking the wage increase and subtracting inflation from that. And it's good to see that actually as negative because it does give you basically a what should I say? No wage price spiral, right? You do not want to see positive wages above inflation. Okay, so here's the actual release. Wow, this is actually really good. I'm impressed. Inflation might be transitory after all. Oh, hold on, that. Why did they link the July? No, this is right. This is what we want. Okay, yeah, there we go. Okay, here, this is correct. So CPI unchanged in July on a seasonally adjusted basis after rising 1.3% in June. Over the last 12 months, we increased. There's the first number, 8.5%. We have gasoline index fell by 7.7% in July. Energy index fell by 4.6%. So you've got those negatives right there, really dragging it down. I really want to see shelter. That's going to be a big deal as well. Motor vehicles. Let's see here. Core. The indexes for shelter, medical, motor vehicle insurance, household furnishings, and operations, new vehicles, and recreation were among those that increased month over month over the month. Okay, that's the concern, but obviously not by too terribly much. There were some indexes that declined in July, including those for airfare declined, used cars and trucks, communication, apparel. Wow! So get out of the summer travel season, and we see a decline in travel. That's going to be real interesting. Okay, big move in the 2-year Treasury, down now 17 basis points. Markets are loving this. Stock futures now up more than 1%. Flat CPI. Holy moly! Like, this is freaking awesome. Look at this chart. Hold on, I gotta hide myself for a moment. Look at this chart here. Come on, baby. Look at that. That is freaking money. Like, quite literally. Okay, good. So let's see. Okay, the chart. Okay, that chart's not going to be that fun to look at. Hold on. I want to get This might be a little easier. Okay, yeah. This is the chart. So the column here is always really confusing in terms of what we want to look at. So this is the month-over-month column right here on the right side, So the far right side, that's the seasonally adjusted month-over-month. And then this one is the unadjusted. But we'll look at seasonally adjusted. So seasonally adjusted, energy, motor oil drops 11%. See, but it's so okay. It's so weird. Yeah. Okay. Even in the unadjusted percentage, you get that 11% drop. So it's not like they're, well, who knows? They could still be cooking the books, but maybe that's less so. Okay, apparel down 0.1%. I don't know, man. I just got this jacket that's now covering up the spy is falling because the spy ain't falling. Used cars and trucks, negative 0.4. Transportation services, wow. Only actually negative 0.5% right here. This one, look at this. Last month came in at 2.1%. Last month was a complete disaster. And wow, airline fares actually coming down, negative 7.8% after that summer boom. That is incredible. Let's get the shelter index and see where that is. See if there are any major drops in food in case anybody wants to shop for anything cheaper. It does look like oranges are going down. It looks like frozen and non-carbonated, carbonated, oh my gosh, it's too early. Juices and drinks are going down, okay. We got to get out of food. There's energy, all items. This is your core right here. We've got window and floor coverings down 0.2. Let's go. That's going to be great for real estate because we're going to be doing so many real estate deals over this next year, especially with the Series A. Go to metkevin.com/Series A to learn more if you haven't yet. Throw your information in. There's not really a learn more yet. Linens, negative 1.8, negative 3.1 on other furniture, but you're still seeing living room, kitchen, and dining furniture actually increase. Sorry, Lauren bought some bean bags. Major appliances down 2.2%. So a little red flag there for like a Whirlpool, all right? Men's shirts and sweaters, all right, minus 2.4%. You've got still women's suits and separates up 2.7. Women's dresses up 3%. So you're still seeing that sort of outward clothing in many cases increasing here. Okay, let's get to services because what we don't want to see is too much of an expansion of CPI over to services. Lodging away from home, final freaking Lee. Let's go. Okay. Oh, wow. Okay, and this was actually bad right here. A couple things here. So rent for primary residence, this was one of my concerns is this would come in hot at like 0.7, right? And it did again. Last month, it actually came in at 0.8. It's been pretty steady around 0.6, 0.7, and it is off that 0.8 that we got. But this makes up, right here, housing makes up about 33% of the CPI read. And so the fact that this came in at 0.7, which is an annualized rate of rents going up of 8.4%, the fact that it came in at 0.7 is actually really, really good. This is phenomenal. So then we've got other lodging away from home, including hotels and motels, down 3.2%. Sorry, Ben Mala. Interesting. Okay. Owner's equivalent rent of primary residence, that comes in at 0.6. Water, sewage, trash collection, 0.4. Moving and freight at 1.5. That's a little hot, probably because so many people are moving out of California. Car and truck rental. I don't know. Car and truck rental, though, down 9.5%. Whoa. On transportation services, dragging that entire sector down. Airline fares, this is beautiful, dude. Airline fares have just been so bad. Public transportation down negative 6.1%. Sorry, shelter itself was 0.5. Shelter itself, 0.5%. And those are on the month-over-month figures, right? A lot of negatives here, though. This is freaking phenomenal. Photography is a negative. So if you're in the photography business, cable TV going down. Recreation services actually up 0.4, but that's actually not too bad. Let me get my coloring correct again here. Okay, other personal services. Ooh, what are other services? Whatever. 0.8% to the downside. So whoever's getting those. Whomever, I don't know, one of those. Anyway, apparel services other than laundry and dry cleaning. I don't know. Okay, so tailoring still going up 1.5%. But this is admission to sporting events, 4.9%. Okay. All right. And then we get some more subcategories here that just sort of rounds them together again. But I mean, look, the fact that here's something I'm going to do. Okay. I'm just going to highlight for a moment everything that's negative on the month over month change. And what it's remarkable because and these are larger categories, right? So it's just this page here. But it's remarkable because I remember back in the inflation is transitory days saying one day we will see a bunch of negatives here, and I can't wait for that day to come. Earlier this year, I'd been saying we probably have to wait until the August-September reports because we've got to get sort of the fear of war and the commodity shock away. And folks, here it is. Finally, at least it looks like more negative on that month over month than a positive. This is phenomenal. Okay, weaker than expected CPI suggests the Fed could adopt a more cautious pace of tightening going forward. This is coming from a G10 economist. We have chief interest rate strategist at Bloomberg Intelligence. The better than expected core CPI print will be a strong positive for the Treasury market, particularly the long end. So the knee-jerk reaction is unsurprising. The strong steepening of the curve may not last, however, as better than expected core doesn't mean it will fall. In fact, although better than expected, the core may be stickier than the market may be anticipating. I don't know, man. 0.3%. Why are you trying to take away the punch bowl? Okay, we should be partying here. 0.3% on core is pretty good. We were expecting 0.5%. Okay, so maybe you just need to, I don't know, stick your economist where the sun don't shine right now. I'm tired of hearing the FUD. Okay, this is, oh wow, this is an interesting comparison. I'm going to show you this chart here. It shows you the change on the month over month of which sectors were hot versus which were cold. Look at that, folks. Left side, that was June. That was hell. Like, that's when I came to you on the beach with my shirt off. And I'm like, I'm on the beach, but we still doing CPI together. Okay? That was there. That was a real disaster. That was terrible. I probably have to change the title of this one because, like, wow, look at the softness now. Things are actually turning blue. This is great. This is really, really good. Looking at what some of the other suits are saying here, we've got a lot coming through here. Risk assets are loving this. S&P spiking higher, steepening snapback in treasury yields. This is great. 0% headline month-on-month figure also matches the lowest estimate in the Bloomberg survey. Just 4 out of 63 forecasters got that right. What did I tell you, folks? I thought there was a chance we were going to miss to the upside, but I did say no matter which way we miss, these forecasters suck. So look at where these actually came in, okay? So we're going to use a big, let's use a big bright X here that I'm going to draw. So we came in at headline at 8 points, headline, what did I say it was? No, 8.5? Yeah, 8.5. So look at this, folks. This is where the forecasters came in, and look at where people thought they were going to be. And again, the economists get it wrong once again. That's where it comes in towards the low end of the bell curve. I was really like, oh my gosh, it'd be a dream to have something come in over here at like a negative number, but that's okay. We ended up with this number right here, also well off the bell curve. And then over here at 0.3%, again, well off the bell curve. So just a straight up miss. All to the downside, though. So this is so great. And you know what? I've got great news, folks. I do not have another vacation planned, period. Like, I just literally don't. So that's great. And, okay, rent to prime. Okay, let's see here. Looking at some other notes from suits. Bitcoin up nearly 2%. Treasury inversion from 210 briefly exceeds 5. Okay, that's fine. 0.3% core increase is lower than all but one of the 61 estimates in the Bloomberg survey. That's this chart that they're talking about right here. Oh man, like how do you have? Look at this. You know what? You know what they should do? Okay, tell me if I'm an a-hole for doing this. Okay, but look at this. You see this word here? It says qualified economists, 63. I think what we ought to do is just say economists, 60. Oh, that's evil. That's very, very, very evil. Okay, let's go take a look at what we've actually. Oh my gosh, QQQ in pre-market just holy smokes, 2.5%. What? Oh my gosh. So look at us. Oh wow, pre-market we were riding the 318. This was the make or break moment. Or we're either going rallying to the moon or are we going back in the pooper. And folks, moon is the way we're going right now. Look at this. Oh wow, Tesla finally up 5% after the overhang of Mr. I'm done selling for now, and then 4 months later sells a bunch more, it goes away. Trade Desk absolutely killing it right now. Yesterday in the course member live stream, which we will be going to a course member live stream right after this video here completes, we were going through the Trade Desk numbers. There's some things to love here. I actually put the little cheat sheet on screen for you. There's some things to love here. There's some things not to love. I think the biggest concern I had for Trade Desk was really that their growth projected quarter over quarter is really slowing down, but it's way better than the negative that people were thinking for Trade Desk. So Trade Desk was up 16% after earnings yesterday. Now it's up 20%. What a move. Here come the riskiers. Like you've got a firm at $34 now. Matterport's back to $5. Awesome. Oh, this is really good. $42 on Dave & Buster's. Etsy's back to $113. Man, that thing went down to $70 there for a while. Roblox down 10% after their earnings and their miss. Coinbase is probably, even though they missed, they're probably liking this right now. Yeah, they are actually going positive despite having been negative just prior. Let's take a brief listen here to see what these folks are saying as a reaction.
Everything today is on the, is on the good side of the ledger. It's just one of many data points.
Yeah, we've been showing you some.
This ain't one of many data points. This is the data point. Steve here says, signals Fed closer to pause in hiking interest rates while inflation remains elevated. Yes, sir. Yes, sir. No more vacations, Kevin. No kidding. Party's just beginning. Please, no more vacations. Yeah, this is incredible. So rent lags so much that it's expected that even if rents stop going up, the rent opinion on CPI will go up for a bit. Yes, that is called inertial inflation. You are correct. And it's made worse by a Fed rate hiking. We are now QQQ still bobbing around that 2.5% level. Time to bring back the live streams. I really wish I could. They take a lot of time, and I gotta really dedicate. Look. Another thing, I don't know if I mentioned it, but if I'm going to start a huge real estate company, it's going to take a lot of time. And I've been working a lot with attorneys and doing so much paperwork over the last few weeks. I'm like, oh my gosh, just let me go buy real estate already. It's so exhausting. Anyway, this is really, really incredible. I'm very interested to see what happens when we actually get to the market open, because right at market open, you'll know what the institutions are thinking of this. Right now, you're getting a lot of retail probably piling in that's been sitting on the sidelines. Hey, you're pretty dang close to 318 on the QQQ. Sure, could you have gotten this at 280 for a while on the QQQ? Of course. But you know what? This still represents a massive discount from where we were at all-time highs. But we are now in the fast lane to going back to the moon. And so I have to change shirts now because, folks, the SPY ain't fallen. The SPY is rising. And after that, maybe I'll think about changing the title, or I'll just